Hello. Hi guys. Good evening. Welcome back. Yet another Thursday. Welcome back to another Not So Late Night Show with us. So yeah, we let the attendees come in, and then we'll start talking about today's company. Yeah, today's company is quite interesting. Let's see. Let's wait for the numbers to increase. Then I will start off with a little bit of chit-chatting with you guys. Not sure, have you guys heard of this company before? If you have heard of this company before, let me know in the comment section. How many of you have heard of GCB per heart? If yes, you have heard before of the company, you can type yes in the comments, let me know. And if no, then you're in for a good treat. We are going to talk about this company today. Hi, Hisham. So Hisham said, yes, he has heard before of the company called GCB today. So who else have heard before of this company before? So apparently this company is also considered as one of our Malaysia's FMCG company. I'll consider them as one of the FMCG companies. Maybe not so well known because their products are not the one that you find in the supermarkets. They are in a business more to the B2B segment. So basically, they supply their products to another company, and then the company use their products as ingredients and only make it into the products that we know today. But fun fact, GCB supplies cocoa related products to your chocolate companies, to your Nestle, to your Hershey's, and chocolate companies will use the products from GCB to make chocolate. So today's company will be about GCB. The full name is Guan Chong. It is a listed company in Malaysia that is in the cocoa making business.
I think.
But maybe
start.
Okay. All right. Let's dive into the world of chocolate and whether this company is a good investment or not. So just a little bit of sharing with you guys. If you haven't followed us on Facebook, YouTube, or Instagram, please do follow us. Get in touch with us. If you have any company you want us to cover, you can let us know through the multi-channels that we have. And if you haven't subscribed to our newsletter, please do. You can just key in your email. We won't spam you. I think at most 1 week we will just send out one email. There are some weeks that we don't even send. And the good thing is about subscribing to our newsletter, we will give you a portfolio tracker for free. That means you can use that, formula Excel sheet to keep track of your investments, how much you have gained for this company, how much you have lost, and total add up. Is it a winning year for you, or is it a year for you to reflect and further improve for the next year? But yeah, give us a shout out, give us a like, and follow on our social media channel. And here we go, guys. GCB disclaimer: this company, as always, is just for sharing purposes. Do not take it for as a buy or sell call. And if you think the company is really suitable for you and you think you are interested in it, please do further due diligence. Don't be based on the slides that we are showing. This is just a sharing session on how we perceive the company, on what are the good and the bad things about the company. So here you have it. This is Guan Chong Berhad's cocoa grinding facilities, which is in Pasir Gudang, Johor. Very, very big one. I don't know if any of you guys are working in the Pasir Gudang area and have passed by GCB's facilities before, let us know in the comments if you are working in Pasir Gudang and how big is this area. But maybe cocoa is a bit more something that we cannot correlate, but cocoa and the products derived from cocoa actually makes chocolate, and I guess all of us, if not the majority of us, really like chocolate. Be it you're a kid, be it if you are an adult. Personally, I like chocolate. I don't know about you, Chong Bing. Are you a chocolate fan? Do you crave for chocolate?
I think majority of us like chocolate, but personally, I like dark chocolate. The one, if it's possible, the lesser the sugar, the better. So I'm
I
the
see.
Black chocolate.
Okay. So cool. I think chocolate always has this kind of attraction to anyone, unless you have a certain dislike towards this kind of dessert. But before we go into where GCB is, just to let you guys know how the chocolate value supply chain actually works out. So you can see here, chocolate actually derived from cocoa, and cocoa actually goes on tree. So you actually have a cocoa pods from a tree pluck out, and then it will get sent to a harbor, and then it will get transported to pre-processing facilities here, meaning cocoa grinding factory. Then you will further break down cocoa pods into other cocoa-related products, substituents, raw materials. Then only it gets sent to your chocolate factory here. Then after the chocolate is made and processed, only it gets sent to the supermarkets, where people like you and me can actually buy them from the supermarket. So just to give you a rough example, the companies that are more in the pre-processing part is companies like Barry Callebaut, the biggest chocolate or cocoa grinding company in the world. Then after making cocoa powder, cocoa butter, or whatsoever, they maybe sell it to a chocolate company like Godiva. So I think a lot of us are more familiar with Godiva chocolatier compared to Barry Callebaut, because as a consumer point of view, it's the brand name of Godiva that we actually see and encounter, and not Barry Callebaut. So, Chun-Bing, any idea which countries or which region actually produces the most cocoa?
I mean, before we study this company, to be honest, I don't have any clue. But after I looked into this, I just realized actually cocoa come from how should we name it? The what is the term that we should use? I mean, this kind of region is slightly hot and then it's wet.
Tropical,
yeah. So I think majority of the country that are producing a lot of cocoa are tropical area, and then one of the biggest is actually Ivory Coast, and then this is actually in somewhere in Africa, and then Ghana is also Africa, and then the rest you will be surprised actually Indonesia is in it. I think it's because they are at the tropical zone, and then they are suitable for this. The rest is majority of the production actually come from Africa, like if you can see from the top 5 country.
Yeah. So true. Basically, if not all, most of it does come from the Africa region, and Indonesia probably is only the representative in the Southeast Asia region that is in the cocoa production businesses. So let's remember this, guys. Today we're going to talk about companies. So we're going to judge the company to see whether the company has facilities in this area or not. Because if you are a cocoa producing company, it sounds logic, or it really does make sense for you to have some facilities in this region. Else, it doesn't make sense from a logistic point of view to have a plant in America, and then your cocoa plantations are all at the other parts of the world. So let's just keep that in mind, and we can judge GCB later. Africa and Indonesia, key cocoa plantation countries. So here you have it. Basically, as I mentioned just now, cocoa comes from a tree. You pluck the cocoa pod down, and then you take out the cocoa bean inside. and then you go through fermentation, drying, and then you roast it. Then only you grind it into smaller cacao nibs, and then the cacao nibs will then be separated and then further processed to make your chocolate bar. So about the company that we are going to be talking about today, Guan Chong, it is founded in 1980 at Johor, hence the plant is in Pasir Kuda. It is primarily involved as a ingredients company, particularly in cocoa ingredients, and it's one of the world's largest, fourth largest in the world, but I think largest in Malaysia. So it was listed in Bursa Malaysia on 8th of April 2005. So when we talk about cocoa, right, it's going to be a little bit technical, but I will bring you guys through. So when you get your cocoa bean and you grind it into cocoa nibs, you continue to grind, then you get cocoa mass. Oh, sorry. And then from cocoa mass, you separate it to your cocoa butter, and then after you take up the butter from the mass, you get your powder. So your chocolate makers will actually take cocoa butter and cocoa powder and blend it at their recipe, at their ratio. So different companies, different chocolate companies will play around with the percentage of the cocoa butter and cocoa powder to give the distinct taste in their product. So next, we are starting to go deeper and judging GCB's facilities. So just now we mentioned that the key producing cocoa countries are Africa and also Indonesia. So you can see here, Guan Chong's facilities are in Pasir Gudang. They have 2, and then they have 1 in Indonesia. So yeah, a good take for them since they have their facilities in Malaysia, which is a neighboring country of Indonesia, and they also have 1 facility in Indonesia. So this total 3 grinding facility is around 215,000 metric tons. So they basically control the Indonesia producing cocoa producing plantations by having facilities nearby to grind the cocoa pods into their products. So they have another 2 facilities in US, and then the US facilities is mainly in cake grinding, cocoa liquor, butter melting, and also the cocoa butter deodorizing. So, Junming, when we were to look at the income statement of GCB, maybe what is your first impression when you look at it? What do you like? What do you don't like? And what thing you think is temporary or maybe permanent?
Yeah, I think in this annual chart of income statement, it's quite a clear view that although the revenue is about the same, and then of course they hit the highest last year, but then the key thing that you should take note is the profit margins that they are taking. And then I think in the next few slides, we'll actually explain why it actually able to move up, as in the profit margin can go up, and then what is their action that has been taken to actually break through the beyond, as in they wanted to break beyond 10% kind of profit margins. But then if you see from the past, let's say 7 years perspective, the key thing that you will see is actually between 2017 2018. It was the highest profit margin they can ever hit. And then the key reason is because the capacity that they have is much higher during that year. And then it also very much dependent of the cocoa bean prices. That's why even though 2018 they managed to achieve such a wonderful result, but then it go to 2019 and now 2020, the whole profit margin dropped by a little bit, mainly because of the cocoa bean prices. But then all in all, they managed to back on track, churning more and more profits, and then they have some strategic move to push this further. So I think it's quite interesting company, and in a very unique kind of plantation kind of zone that I think very little company in Malaysia offer these kind of services. So if you wanted to go into, as you wanted to invest into chocolate related business, maybe GCB is one of the company you should at least put them into the watch list.
True. So yeah, maybe just a little bit of sharing to our viewers as well. Cocoa bean is a little bit like your palm oil, your palm plantation, oil palm plantation. So it's a commodity. Every day the prices go up and down, swinging like mad. And if you are a cocoa grinding company like GCB, of course your P&L would be greatly impacted by the commodity prices. So the same goes for palm oil company, the same goes for your oil and gas company. These companies, their profit and loss really depends a lot on the commodity prices. So if the commodity prices is unfavorable against them, that's why you can see some oil and gas companies suddenly slip into the red. They report losses because this is the inherent risk when you invest in a business that is in a commodity business. But doesn't mean that commodity business is doomed to fail. It's how the company try to grow, innovate, and actually control the whole stream. That will give them the additional advantage. Later we will talk about it, whether GCB has taken initiative to actually react with the commodity risk of the cocoa bean prices. So next we go into the dividend chart. So I think this company, they did private placement before. That's why the outstanding shares is manipulated a bit. You can see that the dividend per share actually from 10, 11 cents, then it dropped down to 3 cents, 4 cents, 5 cents. So as of lately, it is hovering around 2 cents to 5 cents. It is not a dividend counter if you are a dividend player. I think from the company's achievements and so-called future growth plan, it is really more of a growth company. So dividend investors, you should not take this company too seriously if you want to invest purely for the sake of dividends. So, I mean, the company has been growing. The only downside is that commodity prices can eat into your profit and losses. So it's still a good business. Later we will dig deeper whether can it become better. But here is the balance sheet of the company. You can see the balance sheet here from 2017 up due to Q2 2020, the total assets has been going up. So total assets going up, either is because of cash, either is because of upgrades in facilities. They undergo capex, so they have more factories and more machines. So that can drive up the assets. You can see also the liabilities is relatively flat. 110. This is 1.1 billion and ranging from 1.06 billion. But you look at the debt here. The debt actually from 2017 it was around 0.8 billion. Then it slowly came down to 0.6, 0.69, and 0.7. So it actually came down a bit, the debt level. Then equity. If the equity is increasing, means that the company actually is capturing profits, and profits actually book under the retained earnings segment. So your total equity is actually growing in trend with the total assets. Last but not least, you can see the company is not exactly a company with cash. The cash and cash equivalent is just 0.04 billion thereabouts only. So you can see here, first point why the debt came down is because a huge amount of the operating cash flow was used to pay down the debts. Basically, they earn and then they use the earnings to reduce their debt. So it came down. And then the assets increased. Basically, they bought into a chocolate making factory, not cocoa making, but they actually venture downstream from a cocoa company, cocoa factory. They diversified and went downstream and make chocolate. They bought a chocolate factory lah. Next, you look at the operating cash flow. This company also will show you choppy operating cash flow because the company needs to buy cocoa beans to continue grinding and continue running the factory. So there are times where the cocoa beans, which the company think the price is good, it may utilize most part of the operating cash flow to buy up more inventories. Hence, you see some of the years it's at a negative instead of positive. And investing, if a company is investing to grow the business, it will also be in a negative point of view. And financing is basically how the company play around with the borrowings and also manage their cash flow. So the company is still growing, just that due to the growth, you won't see any nice free cash flow coming from a company. But as of now, I don't think the company has run into any liquidity issues. Just now and then, if they want to grow and manage their debt, they might ask for some rights issue or private placement from the shareholders. So maybe Chen Ming, you want to bring us through the top shareholders of GCB? Do the owner of the company have the skin in the game criteria so that we don't get short play by them?
Yeah, I think based on this, right, when we share this, I think this is a very obvious one because the top shareholder is actually Guan Chong Resources Sdn Bhd, which is owned by the founders. And then the rest is all the key management person. You have, like, if you see row 4 onwards, so those are really the people inside the company. And then they are the one that actually driving the company forward. So in terms of shareholding structure, nothing so risk. I mean, there isn't have any risk. Definitely they have the skin in the game to push this team forwards.
All right. So now we go to the prospects. So suddenly just now we say that Guan Chong has facilities in Malaysia and Indonesia, but there was a missing element to it, because how come the company doesn't have a facility in Africa, since Africa produces most of the cocoa beans? So do you think that Guan Chong is going to set up a cocoa grinder in Africa, Chun Bing?
Yeah. So they have done a few strategic move, I mean, in the past these 2 years lah. And then one of the biggest move that they have set up is actually they wanted to set up another facilities in this country, which is Ivory Coast. Of course, the one we put inside is the French version
French name.
of the
French
name. But all in all, they are Ivory Coast. And then the expected annual grinding capacity is about 60,000 metric tons, which will add up to their existing 250,000 metric tons, and then they will move beyond 300,000. So it's kind of interesting. I think the key thing to take note here is because they can take advantage where this is the place nearer to the production areas, nearer to the plantation areas, so they can skip a lot of costs. Because if you remember what we have shared in the earlier slides, there are 2 facilities, one in Pasir Gudang, another one in Indonesia. So which means the one in Pasir Gudang still need to do some import and export logistic work to actually move the raw material, which is the cocoa fruits or cocoa bean, goes to the factory before they can process. But this one is within the world largest cocoa bean producing country, so it's very, very, very interesting. And then it's going to be completed next year, so definitely a very positive movement. And then we should expect something good happens next year.
Cool. So actually, this is an expansion where they still do back the same business, but they actually create another factory nearer to the source of the cocoa production place. So in terms of logistics, it's definitely a win, and in terms of expansion also, they're doing back what they are best at doing, which is grinding, producing cocoa products. So another one is actually to enter the chocolate making business. So as mentioned just now, companies like GCB, they actually make cocoa powder, they make cocoa butter, and also a little bit of cocoa liquor. And only by making this, then they sell it to the chocolate factories or chocolate makers like Godiva, like Hershey's, like Mars, like Nestle. So one day GCB just said, why not I just make chocolate myself, right? I already have the cocoa products, right? But I don't know how to make chocolate. So what to do? What if I go and buy up a chocolate making factory? So this is what happens. They actually went and bought Shokinut, a German-based chocolate producer, and this Schokina is actually quite well-known company in Germany. They have a production capacity of 90,000 metric ton for chocolate, and for the cocoa liquor part, the production capacity is like 7,000 metric ton. So now not only GCB produces cocoa products, they also can actually, sell their cocoa products to Schokina, and Schokina make chocolate, and then Schokina sells the chocolate to normal people like you and me, and they actually enjoy the benefits of producing cocoa and also selling chocolate as well. So it's more of a value stream going downstream and capturing the end customer business point of view. So you guys may wonder, or Chun-Ming, when a company like GCB, when they enter downstream to buy chocolate companies, what would actually be the question that you ask? Why are they doing something that they are not familiar with, or is this an opportunity for them?
Yeah, like what I've shared during when we presented the income statement slides, they are struggling with the profit margins. If you compare back with a lot of tech companies that we have covered, typically they can make 30 to even 50% of profit margin. So for all these slightly traditional kind of industry, where they are in between the up and midstream, doing the grinding services, is very competitive. So the only way for them to move up their game is to go much downstream, reach the consumer directly. So it's like how QL try to turn the food that they've produced and then sell it out through family marts. So this is exactly why they acquired the German company. And then you can see from the chart here, this is the the net margin that's making by Hershey, one of the biggest chocolate company in the world. So you can see easily is 10 and above. Although some of the time it might drop to 5, but it's really something something happened during that kind of year, only will drop the margins. So for example, 2008, their financial crisis. Maybe 2020 also they are dropping, but then if you see from this chart, they still able to maintain above 10. So all this is something that is we will call it as a prospect that we should take note, and something good should be happening in the near future for GCB.
Yeah, I think this is a very good move to actually enter the chocolate making business. I don't know about you, Chun-Ming, but have you really checked the selling price of Godiva or other, those Changi or swanky looking chocolate boutiques? They usually sell their chocolate at very expensive price, more expensive than the normal chocolate that you get from the groceries as well. Because chocolate can be a very indulgent kind of product. It can be very atas kind of chocolate as well. So I think this is how chocolate companies actually up their game and show that, hey, my chocolate is actually better than the other players. So I can actually convince customers to pay higher prices for my chocolate. So risk. Even though GCB is going to go into Ivory Coast, set up a new plant, and then buying a Schokina and going into the chocolate making business. That being said, it doesn't mean that the company is going to be smooth sailing in the coming years, because eventually this is a company that is operating in a very competitive business. It is still very dependent on the cocoa bean. Now that they sell chocolate to consumers, maybe they can offset a bit of the losses because chocolate commands a higher margin, as we saw just now, compared to just selling cocoa products. But when we talk about just within the cocoa product sphere, they are not alone. They are not the only grinder in the world, and there are other big grinders. Maybe Chun-Ming, who are the other competitors that GCB need to take note of?
Yeah, so in our, as in the title of this presentation is the 4th largest cocoa processor in the world. So this is the one we put in here is a top 3. And then you can see they are way further, as in way bigger than GCB in terms of the capacities. So you can see, especially the Barry Callebaut they are having 1.2 million metric tons. Is about 4 times bigger than GCB after the expansion to Ivory Coast. So they are really big. Olam's and also Kagyu is the one also quite close to 1 million. So that's why we are saying this space can be quite competitive in that sense, because the top three are getting bigger and bigger. And of course, when you get bigger, there will be some sort of advantage when they talk about pricing factors, because they can manage so many things. When the volume is up, they can bring down some of the costs. So all this is not a good sign or the risk that GCB is facing. That's why I think pushes them for them to actually acquire the Germany company so that they can go to the downstream rather than struggle with all these top 3 players that's trying to compete the price with them. So this is the key reason why they try to get out from this zone. I think the next one we put an image with a lot of currency. Yeah. So for GCB, right, because they have facility in different countries, and they are supporting. They have a lot of sales office around the world. So which means they have a lot of trade receivable or even payable in different currency, and then they don't really use one single currency as a common one when they do trading. Like most of the company, they will make USD as the common currency when they do trading around the world, but not for GCB. Beside USD, they have Britain pound, Indonesian rupiah, ringgit, dollars, and also euros. So all this is actually making them having some sort of risk if certain currency is having some problem. But of course, on another word is they are having some localization advantage, because they take loan from the local finance institution, and then they are paying back with the same currency. So these are some of the things that we should take note, especially the competition part.
Yeah. So maybe, I think this is another 2 risks. Just even when you think that, okay, GCB has to take note that there are 3 larger cocoa grinding companies that can compete with them, then you come another inherent risk of the commodity market, which is the price volatility. As I mentioned just now, your cocoa beans will go up and down in prices, just like your palm oil, just like your crude oil. And there's really nothing much these companies can do about it. Basically, if the price swing in favor, then it will be a year where the profits are significantly higher. But in a very not so good year, the prices may be eating into the company's profit margin. And hence you see just now why the GCB's profit margin can go up and down, just because of the cocoa bean prices. So price volatility, over here you can see that the Ivory and Ghana, actually they supply almost 65% of the cocoa bean around the world, and they are trying to impose an additional purchase price of 400 USD per ton to cocoa to raise the farmers' living standard. So I think one of the key reasons also is about the financial fair play. They don't want the commodity companies to be taking advantage, paying the plantation owners meager sum or cheap sum to buy the cocoa bean from them. So when that comes into play, cocoa prices will become more expensive and it will eat into the margins. Next, you have the supply risk. So cocoa trees itself is actually very susceptible to weather changes, and also pests, and also different kinds of insects can also cause the beans to get eaten, and then you will face with a shorter harvest as well. So these are the kind of risks, natural risks. You really cannot do anything about it. And the bean supply from Indonesia has been shrinking as well. So if your bean prices gets impacted by the weather, or due to whatever reasons the supply is shrinking, definitely the bean prices will go up. And if the bean prices go up, GCB cannot charge chocolate makers a higher price when selling their cocoa products, then that's where you see that GCB's net profit margin can get impacted. So that's the kind of risk that you need to take note of if you want to invest into commodity kind of company. So sometimes, I think some week ago, somebody asked us to look into plantation company. We haven't got the time yet, but here is a kind of example. You can see that commodity companies will definitely have this kind of risk, and the income statement will not tell any lies. The profit margin is unstable and unpredictable. So another risk I would also like to share with you guys. You see here, you have the two big boys here, Olam and Barry Callebaut. Just now we talk about them. They are the biggest for Barry Callebaut, and Olam, they are the second biggest. So you know why people can become the biggest and the second biggest? Because they go and buy out other smaller companies. So ADM Cocoa was previously under a company called ADM. It's a US trading company. So I think ADM got into some trouble in their cocoa business, and Olam actually bought out the total ADM cocoa business. So ADM sold off entirely their cocoa business to Olam. That's why the capacity from ADM combined with Olam existing, then Olam becomes second biggest. And for Barry Callebaut, same story as well. Barry Callebaut actually grew and grew and grew by buying other smaller cocoa companies, merging them to become its own capacity. And this is also one of the latest examples where Delphi got the cocoa business from Delphi got bought over by Barry Callebaut. So if you guys really study the cocoa business, previously I was from the cocoa business as well. I deal with cocoa as an ingredient in my previous company. So I get to study this kind of company. I get to understand how the background of the companies actually work. So there will be a risk where if GCB were to go into some trouble, then Barry Callebaut, Olam, or Cargill will actually knock on their door. Okay, you're in trouble, right? Come, I can help you. Then these companies may buy out GCB, and if the buyout price is not so favorable, then as shareholders, there's a risk that our investments will turn sour just because there is a hostile takeover. And this is possible because in the past we have seen companies like ADM and Delphi get bought over by Olam and Barry Callebaut. So you have to take note when you invest into cocoa companies or even the plantation companies, because there's always going to be merger and acquisitions kind of deal going on. So that being said, the company itself still has a lot of growth story. They are going to build new cocoa grinding facilities in Ivory Coast. They also went into the chocolate making business as well. So there are goods and bads about this company. I won't say good and bad, but more of a pros and cons. It's a risk, but if the risk is managed well, it will turn into a profit or reward for shareholders who believe in their investment thesis. So that being said, maybe I will ask Chun Bing, given the current situation, current prospect of GCB, and with today's valuation, what are your opinions, and would you actually put this company in your watch list?
I think nowadays we share a lot of stocks, and then it's very rare that we can see those stocks with a P ratio less than 15. So I think if you are a bank stocks lover, then maybe you will see this kind of PE ratio. But beyond that, most of the time, easily is 20 and above. And then when we talk about growth stock, even though they are 20, 40, or even 60, if their PE to growth ratio can be justified, usually we will still keep this under the radar. So for example, if you has been following GHL, I think their PE ratio is a bit crazy high, much higher than revenue, but people still buying it. Maybe because they do some bonus issue, people thought the price got corrected, but actually it's not. But I think this thing is always happen. So for me, there are a lot of prospect. There are a lot of prospect we can see from this company. And then those strategic move, it sounds or look logical to me. But of course, you need to take a step back and think on the bigger picture whether the cocoa business will grow or not. Looking at the current economic situation, will people still consume a lot of chocolates, all those things? We don't know. But then from a purely a valuation point of view, I would say is relatively low, the PE, and then definitely it have a lot of room to grow.
Mm-hmm.
And they have been able to prove to us lah. I mean, in the past 5 years, they started off with, let's say, even 0% margin, go to 1 to 2%. Now they are hovering about 7 to 8 consistently for the past 2 years. So all this is kind of a good sign where you should keep this company in view. And the good part is they are not that famous, so there will be a lot of much lesser manipulation, or we say goring kind of action happen to this stock lah, which is slightly good to me, because if you cannot take your heart cannot take this kind of crazy price movement, then this one maybe is some stock for you to keep in view.
Yeah. I guess you're right, JuJuR. Yeah, I think even for the past few weeks or months where we cover tech companies in Malaysia, the PE has always been around 50 plus 60-ish. And that time it hadn't even fly up. I think after some of the companies, after we talk about it, the share price even went higher and the valuation even got crazier. So maybe some retail investors find it very hard to accept that, wow, this company is already selling at PE 50, 60, how come it can go up again, right? And then we also talk about companies like QL, which also has a very high PE valuation. So this one, I think, among all the companies, it's going to be relatively the lowest. That said, it still has its growth prospect, but I think one of the key risks that is pulling down the PE is actually the uncertainty of the commodity market. This one is something we cannot control and we cannot manipulate, and the company itself, they also cannot hedge the risk of it. So it's just good year, extra profit, not so good year, then the profit gets eaten up. But you just base solely on last year's performance. ROE not too bad, yeah, hitting around 20% of ROE. So it's pretty much a good sign of it. You see the profit margin 7%, CAGR revenue growth 8%, so not too bad. Company's top line is growing, just that the profit will get impacted a lot. Dividend yield is around 6-4%. Not too shabby for a growth company, I would say. But overall, I would say, yeah, this is a company, if the risk really gets taken care of, then it really will be a fantastic opportunity for the company to grow further. That being said, this is a company that has facilities in Malaysia, Indonesia, and also going to have in Africa region. So yeah, I think the stars are shining bright on the company, just that there's a bit of uncertainty that is bound to haunt this company. And if you choose to invest in this kind of companies, you have to be ready for a while, right? Because nothing is going to be perfectly smooth for this company. So I think that's for today's company, GCB. Let us know your thoughts. Do you think GCB is a good stock that you would watch list it? What do you like about it? What do you don't like about it? And we will head on to the comment section and look for questions or opinions from you guys. Hi. I think we see a lot of familiar faces. Darren, Taryn, and Chongqing. So yeah, Darren is coming here with the first question. Is GCB have downstream and midstream, upstream business like palm oil and gas? So yeah, Darren, if you heard just now, GCB currently is the midstream. They are in the grinding facility business, grinding cocoa products. And then they just bought Shokinak, the chocolate making company. So they are, maybe I would say, in the mid and downstream. Just that they don't have any cocoa plantation. So they are midstream, downstream. Next. next question is from Tim. So Tim is saying, from being a supplier to venturing into producing an end product, it reminds me of Carex, the main supplier of Durex. Business was doing well until they decided to produce their own brand. Will GCB fall into a certain fate like Carex? Thoughts? Tim, this is a very good question. Basically, the processing or production setup to make cocoa powder is going to be different from chocolate making. And to enlighten you, the biggest company producing cocoa and also chocolate, we call it, let's just say we call it, they are into both areas of it, is Barry Callebaut. So previously, when humans start to make chocolate at the time, they were just little companies who have the knowledge and technicals to make cocoa powder, cocoa butter from cocoa, and then from cocoa powder and cocoa butter into chocolate. So Barry Callebaut was the first company to actually have an integrated process from cocoa powder to chocolate. And somewhere around the road, they found it a bit difficult to control the whole stream of it. Then this is where individual cocoa grinders like GCB, you have another company called JB Cocoa, Malaysia cocoa grinder as well, but listed in the SGX. They had this opportunity to actually take the midstream segment of the business because companies like Barry Callebaut decided to let go some of it. So they became more focused on the chocolate making part as well. So midstream grinders like GCB actually had the opportunity to grow. So will GCB be like Carex? I won't think so because the cocoa grinding facilities is totally different from chocolate making. Unless the chocolate makers have the kind of money and the kind of strategy to actually venture upstream, which I won't think so because cocoa powder and cocoa butter is still a commodity. And if they can manage the commodity prices, how they can control their selling price to the customer, that actually nullifies the risk of buying raw materials at unfavorable prices. So it's more than the midstream need to go downstream rather than the downstream need to go upstream. So this one is a bit difficult. Care to comment something about living income differential? What is it about? Income differential. I don't think I have the. Let me Google it and read about it. Yeah. So we also talk about. Okay. So this one is the surcharge that the so-called organizations around the world, they want to prevent cocoa companies or the midstream companies from buying cocoa beans too cheaply from the plantation owners. So they say that, okay, you cannot bully the owners, you cannot bully by paying them such a low price. There must be a minimum price that they are getting for planting the cocoa and harvesting it. Though they're doing all the hard work, and then you guys just can't buy it off so cheaply. So definitely, if this comes into play, it will actually increase the premiums of the cocoa, and then cocoa prices will become expensive. If the prices cannot get charged or flow down to the chocolate makers, then it will impact. But I think this is slowly becoming a norm. A lot of chocolate makers, they also show that they are actually sourcing cocoa powder and cocoa products responsibly. That's why they have the logo there. And it's more of how we consumers actually are willing to pay. And you can see that cocoa companies are still surviving. They are not into any sort of trouble at the current moment.
So something to add yes, this is something that impacted their profit margins, and especially with their expansion to Ivory Coast. So most of the Africa country have decided to go around these living income differentials, and then they sort of form some sort of airline to set the minimum benchmark. What is the minimum wages you should pay for all these guys? So when it happened, I think none of the cocoa facilities, as in cocoa grinding facility provider, will get rid of it. And then there was some interview done to the owner of this company GCB, and then from the figure itself is still manageable at the moment, and they are ready for the upcoming challenges, which mean they are ready that this kind of cost will continue to go up, but then they don't foresee it will turn into a very big risk, like suddenly the profit margin will drop like don't know how many percent. No, so they are already inside this kind of I think they already consider all these things when they have decided to expand their facilities to Africa.
Okay. So yeah, is GCB business more dependent on overseas market or local market? JuJuR, have you any idea on this?
I think it's quite diversified. Because they are not the chocolate providers, they are like the raw material providers. And I think we have a slide sharing. There is a few different type of raw materials can be done from chocolate perspective. As in cocoa bean perspective, they are cocoa powder, cocoa butter, and another one is we call it cocoa mass or cocoa liquor. So all this is not only being used as the raw material to produce chocolates, chocolate drinks, and a lot of others foods that's come with cocoa flavors, also source listing from them. So I would say it's not really depends on overseas or local. But what I can tell you is a lot of times they are trying to sell all these things to the local market and the neighboring country. So this is the reason why they also acquired the company that's in slightly downstream, the one in Germany, because they are eyeing to one of the region that love chocolate the most, which is Europe or US. But of course, they are not in US yet. So this is the reason why they choose Germany, because they wanted to enter the European market.
Which is a good thing.
Yeah.
So I think with that, their carbon footprint, or would say their revenue footprint, would be more diverse. I think cocoa powder as a commodity, they sell it worldwide. So basically, if there is a willing buyer, they are the willing seller, and the price of transporting cocoa powder from Malaysia to whichever part of the world the price seems right, then it is possible to just sell it all around the world. So last I remembered, it's quite pretty much diversified, and it's definitely easy for them to sell to any countries, because this is a commodity. It's just how they want to price it in and grow their market share in respective countries. So nothing to worry on that. So yes, thank you, Chin San. I hope you enjoyed our sharing. And of course, thank you for your time as well, and everyone's time for this 1 hour. So next, Darren, is there any local competitor to GCB? Okay, just now we mentioned there's a company called JB Cocoa. JB Cocoa facilities is in Malaysia, but they are listed in Singapore Exchange. So yes, local company is JB Cocoa, and there is also one Barry Callebaut factory or cocoa grinding facility in Malaysia. So if you count that as well, yes, within Malaysia, I think they are JB Cocoa and also Barry Callebaut as their competitor locally. Daniel is asking, how could GCB reduce the gap between the revenue and the profit margin? So yes, Daniel, it is true that you notice that GCB's profit margin is cyclical, whereas the revenue can continue to grow. So just now we mentioned that by going into the chocolate business, if they can make good quality chocolate, they can market the chocolate well, then they can sell it at a higher price, then that will ultimately improve the company's overall profit margin. And there's also a bit of synergism now that GCB supplies the cocoa to its own company, Shokina, to make the chocolate. They can just sell it cheaply rather than at a profit, and then they report the total performance of the group. Then you can see that actually the synergism effect kicks in, and the chocolate making business is actually pulling up the profit margin. So we definitely hope to see the chocolate making business to contributing positively to the profit margin in the coming years. So that's one way that they are working on. Hopefully it is a very positive reaction from this kind of acquisition. So we hope that it satisfies your curiosity and the question that you asked. So yeah, I think we managed to answer everyone's question. If you guys still have any questions, keep it rolling. Else you can also ask us questions that are not related to the company, just overall investing. We will stay online for 5 minutes before we let you all off for your late evening to rest. So Junbing, any additional comments that you want to tag on while we wait for additional questions?
I think we should share how this company got started and what is their relationship with JB Cocoa. I think maybe you're the right person to share. There's a lot. For me, it's kind of like some juicy kind of side story about this company, but it's worth knowing that. And then this can be something that you should take note on how they started and what is the step that they grow the company to a larger scale.
Okay, cool. So yeah, let's talk about how the founders or the management of the company actually grew GCB from 1980 up to today, 40 years, right? 1980, 2020, yeah, 40 years. How they used 40 years to grow a company that did not have any specialty knowledge in making or grinding cocoa from zero to top 4 largest in the world. So if you look at just now the top shareholders, you'll notice a lot of Mr. Tay. So GCB is owned by the Tay family. It was founded by Brandon Tay, the current MD and also the CEO. So how Brandon Tay got into the cocoa making business? So just now you also heard that who was the competitor of GCB in Malaysia? We mentioned JB Cocoa, right? So fun fact, the founder of JB Cocoa is also Mr. Tay, and that Mr. Tay is the cousin of the Mr. Tay of GCB. So Brandon Tay, when he finished study, he went to work with his cousin, Mr. Tay, at JB Cocoa. So he started to learn the cocoa grinding tips and tricks, the technicalities, and all the relevant knowledge. Then he just said, okay, since I know everything already, or I know most part of it already, why not I just open up my company? So he and his brother, they left JB Cocoa, they opened up GCB, and from there they just use back the same knowledge, use back the same technicals, build cocoa grinding facilities, grow it bigger and bigger, and then that's how they actually grew from being zero to the top 4 largest cocoa grinding companies as of today. So they are a bit of family relationship with the JB Cocoa management, but I think they do not have any related party transaction. So it's still GCB, JB Cocoa. Tim actually has before Tim, I think Darren think about the GCB in McDonald's rather than the Cocoa Guan Chong. But yeah, I think Tim has a sharing which is quite interesting. Have they not mentioned in the US market? Yes, Tim, they have mentioned into US market. I think just now we mentioned they have 2 facilities in the US, mainly for cocoa butter melting, cocoa butter deodorizing as well. Yep. It is the Carlisle Cocoa Co. LLC, Delaware, through its wholly owned subsidiary GCB. Yes, they have 2 facilities, but that two facilities is not cocoa grinding. It's mainly to facilitate the cocoa ingredients turning into something more easily consumable by the chocolate making companies. So when we talk about grinding facilities, we are talking about the companies or the facilities to take the whole cocoa bean and then grind it into either cocoa liquor or to make cocoa butter and cocoa powder. So that facilities in the US market does not count into their cocoa grinding capacity mathematics. So yeah, of course, thank you guys for your time as well. We always put our very best effort to ensure that your 1 hour with us is truly well spent. Darren is already excited about next week topic. So next week, as promised, we will be going back to tech. There are a few tech companies that is on the waiting list to be shared. I will share it with you guys. The next company or next week will be JF Tech. So this is another tech company where I think the price has been rising crazily for the past few months. P is around 100 plus, and some of you guys, or most of you guys, are very excited of what this company actually does and can I still invest in it? And it seems like it will never stop going up. So yeah, you asked it, we will do it. The next company for next week's Not So Late Night Show will be JF Tech. So stay tuned, and yeah, we will see you next week. So remember to tell our friends if they want to know more about JF Tech as well. Let them know, and we'll meet with you guys and your friends same time as always, every Thursday, 9 p.m. to 10 p.m. JF Tech, guys, next week. It's the week. So yeah.
See you. Bye bye.
See you. Bye bye.